I'm Danni Hewson, Head of Financial Analysis at AJ Bell, and I'm joined by James Flintoft, Head of Investment Solutions at AJ Bell. And we're going to discuss the performance of AJ Bell funds in the final quarter of 2024 and also look back on how the year as a whole shaped up. James, thanks so much for joining us. The first question, of course, here is, how did markets perform in 2024?
Hi, Danny. If you think about going into the year, there was a lot going on in terms of politics. We've had a lot of geopolitical interference throughout the year. But despite all of that, actually, it's been a really good year for equity markets, particularly, of course, in the US, which has led the way throughout most of the year. But if you look in other developed markets like the UK and Japan, they've had a pretty good time too as well. The returns there have been in and around what historically you've achieved. And then China had a bit of a struggle at the start of the year, but in the latter part of the year, it has really come to life. So yeah, generally speaking, pretty good year for equity markets despite all that political noise that's been around. And then on the bond side, that has been buffeted around a bit more by the political noise, particularly on the government bond side. Corporate bonds, they've had a really good year as well, and they've been the place to be in bond markets this year.
Let's focus in then on that final quarter of 2024. What about performance there?
Yeah, I think there's probably three main elements there. So obviously the US election, long anticipated, came around. Generally speaking, going into the year, the expectation was that Trump would win anyway. So that came through. We've had some dollar strength on the back of that, and a lot of optimism around the US equity market as well. So returns there have been very good. In the UK, news has been less good. Some of the kind of post-election optimism has deflated with the budget. Around that time, the pound has been a bit weak versus the dollar, but actually strong versus the euro, so it's been a bit of a mixed bag on the currency side. And then in terms of China, obviously at the end of Q3, we had a series of announcements. We've seen a lot more announcements from the government over this quarter. Some of that optimism remains, but actually a lot of investors are waiting for delivery now. So some people are on the fence, so it's been a bit volatile in China this quarter as well.
Let's think about the bond markets then. How have bonds behaved given the fact that interest rates have started to come down?
Yeah, and you'd expect them to perform well in that sort of environment, but really it's all about expectations. And going into this year, expectations for rate cuts were pretty high, and some of those were pushed back throughout the course of the year. And actually there's now an anticipation that rates will be a little bit higher for a bit longer than anticipated. So government bonds have been volatile and not performing particularly well. As I said before, corporate bonds have really been the place to be, particularly the riskier part of the bond market, where really the optimism around the economy has reversed this year, and it's actually, generally speaking, looking a lot better than what people thought going into the start of this year. So yeah, riskier corporate bonds have been a good place, but government bonds are pretty volatile.
Let's drill down now into AJ Bell funds. How have they performed this year?
Yeah, performance has been roughly what you'd expect in any given year, to a little bit above that, higher up the risk spectrum. Returns have been pretty strong, double digits in some cases. There's been a mixture of environments throughout the year where bond markets have been volatile. Some of the low risk portfolios are perhaps disappointed at times, but going into the end of the year, returns were pretty good.
Now let's sort of fast forward, thinking about 2025. What are we looking at in terms of how you position the portfolios?
Yeah, we like to think about what the risk is to our portfolios at the minute, and we think particularly around the bond exposure within the portfolios, we think it's inflation. With all that noise around politics this year, inflation coming back to target has gone a little bit under the radar. People aren't noticing the inflation figures quite as much as they were at the start of the year. And we think that's a risk in terms of bond market positioning. So we're thinking about de-risking some of that positioning. And then on the equity side, generally speaking, we like to not get too involved sentimentally with how we're positioned. But we are thinking a lot about the concentration within markets, and particularly within the US market, how concentrated that is within a couple of stocks in that index.
Thanks so much for talking to us, James. We look forward to catching up with you and the rest of the team over 2025.
Thanks, Danny.